The number I'm about to share with you is not the price of silver. It is a much more important number, and the debt clock has just become supercharged to be able to share with us the exact information that we need to understand silver even more. Let's explore! You know, the one lesson that I want you to take away from this video is that silver is a finite resource. Now, with that being said, it is not incredibly rare. It is rare compared to copper and iron and other metals out there, but nonetheless, there's plenty of it around. And honestly, that's a good thing. But when you think about it in terms of the amount of dollars that are floating around, that gives us a little bit different story. This is why this is not the price of silver we're going to be looking at here. The U.S. debt clock, it has been updated and supercharged. It has been intensified, essentially, as we are now sitting at $33.1 trillion in debt. Now, there are some who think the debt clock is kind of bogus. And, I don't know. I think there's a lot of truth to some of this. It is a bunch of numbers on a screen, a lot more numbers now as it has been updated, with a lot of different things like what we're spending on defense, Social Security, a lot of information on here that is sourced. And of course, you can take any numbers and make them say what you want. But nonetheless, one thing is for sure, we do have $33.1 trillion in debt. And this number is ticking away at an incredible rate. By the time you finish this video, more likely if you earned $1 that is incurred by the U.S. national debt, you'd be a very rich person. But there's numbers that are important to look at here before we get into silver, because sooner or later this is going to come back to bite someone at some time, somewhere. Will it be us? I don't know. We've been able to kick the can down the road for so long, it's hard to say. So in 1960, the U.S. federal debt to GDP ratio was at 52.36. In 1980, it was less at 34.6. In 2000, it was 56.1. Now it's at 122.61. During World War II, it was like 129 to 1. So we are essentially trading at debt at wartime numbers nowadays. And with all the money going to Ukraine, it's no wonder why this is happening. But we're going to take a look at this thing. I want you to kind of pay attention to this number here because they have updated this with a new price. And this is it, $1,562 per ounce. That is a ratio for the silver to dollar ratio over the past 5 years. And that's pretty amazing to think about. And we can see that number differs from where it is over the course of 10 years, $1,124. It has been updated to show those figures. Because for quite a number of months now, in fact, probably close to a year, and in fact longer, it has been at $0. Why is that? Well, they show us here. And I've explained in my previous videos on this series called The Debt Clock and Silver, and this video will be the latest in that, is the dollar supply is going down here. The dollar supply now is going down. However, the dollar supply added since 1913 continues to rise. Now, if we take a look at these and highlight these things, we can see what exactly this means. I always have to explain this, but invariably somebody doesn't watch far enough into the video to get this explanation. So here's what the dollar to silver ratio means. In this case now, from $0 before is what it is now, but over the course of 5 years, the 5-year average of the yearly increase in the U.S. M2 money supply, which is the most popular metric. There's like 3 or 4 different metrics for the money supply, the amount. And the M2 is the most commonly noted or referenced here. And so it is the 5-year average of the yearly increase in the M2 money supply divided by the yearly world production of silver in ounces. Now keep in mind that's on a 5-year to a yearly. And what does that tell us? Well, given the average over the past 5 years of the yearly supply, which differs every year, some of these numbers are going to be somewhat variable, because you might have a year where there's not quite as much silver production, and then a different year where there's a lot more silver production. And we don't have those figures, but the sources are the USGS and Federal Reserve. And, we can go back and see what this means, because if we look at it now, it's still at zero. And if we look at what it was over the course of time, the dollar to silver ratio, back in 1913, it was $2.69 an ounce. That's when it all started with the Federal Reserve System. So that gives you an idea here. But what does this mean? A shrinking money supply here, but essentially, since 1913, that number keeps ticking up, the amount. But we're at negative 790 there is what's going down here. But let's take a look at what this means. If we go to the Federal Reserve's website, we see a chart here. And this chart tells us a little bit about what's going on with the M2 money supply. And if we zoom in here, we can see, well, before we zoom in, take a look at it over the course since 1960. It's been a relatively steady increase, but an increase nonetheless of the money supply, and through recessions as well, too. As we see, the gray areas are recessions, and they kind of keep bumped up there. And we started to see it with quantitative easing 1, 2, and 3 right around this point here. And then we see it keep on. There's quantitative easing 1, and then 2, and then 3, and then to infinity, essentially. And it kept going up, and then we had 4 here during the pandemic, which is a radical shift and movement to the upside. So let's zoom in a little bit here, if we can, and take a look at this through the course of the past 2 years here, or 3 years. And we can see that the M2 money supply has increased. It has topped out, and it has started to come back down slightly, ever so slightly. And this is why the M2 money supply is now essentially flat or negative. But although, as you see here, since April, it has kind of started to peak back up again a little bit more. And it's relatively been fairly flat over the course of the past months here, or over the past year here. And we can see, zoom in a little bit here, we can see how it's kind of come down a little bit, but it's kind of flatlined, and it's now starting to come back down again. But a lot of this is because of all that they've added. These pieces of legislation that Congress has passed and the president has signed add trillions of more dollars to the debt. In fact, we did see within about a week and a half, $1 trillion added to the debt. And this brings us back to here, which is why we've got this massive bloated debt right here. I mean, let that number sink in. $33 trillion, $33.12 trillion. And then we go back over here and look at what silver is doing. And we can see here, indeed, over the past 5 years, there's been 1,562 dollar bills printed per ounce of silver mined year over year. To me, that's a much more powerful number than what the price is, because there's a certain finite amount of dollars that are printed, and it seems like they can just keep doing it over the past 5 years, and likely they will pick up again too. We may go into another era of quantitative easing again, because will we ever get back to where we were before the pandemic in terms of the money supply? Likely not. And we're here, and inflation is telling us that's exactly what's happening now. And so that's the situation we find ourselves in over the past 5 years. $1,562 is a lot of money. So I'm glad that they have added this. It puts it into perspective. And even the past 10 years, which takes us before that time, average it out, that's still a lot. In fact, if you look through this playlist of the videos called The Debt Clock and Silver, you will see a wider range of these dollar to silver ratios, the dollar silver ratios that are happening right now. One went as high as over $5,000 per ounce. So they're there. Now, thankfully, they've added a lot of other metrics as well here too. We have the dollar to gold ratio. Look at that over the past 5 years, 12,632. And over the past 10 years, 9,353. And it gives you an idea how much the massive spending, about $7 trillion that has been put in since 2020. That's pretty remarkable to see how that hasn't affected that. And then we look at the price of the median for new home, what it was in 2000. These are inflation metrics that I don't like that are here. It's crazy. We have a paper to silver ratio that gives an idea of the derivatives market that we're seeing there. It's pretty remarkable when you see that kind of stuff. And we've got other things, the G7 GDP to gold ratio, and the BRICS GDP to gold ratio. It's pretty remarkable when you see how that plays out. To see, and the M2 money to USA dollar ratio now. That's M2 money supply and USA to the ratio right now, 1774 to 1. So a lot of different things. What it was back in 2000 was 526 to 1. So there's a lot here to digest and to see how this kind of works. I'm glad that they added all these different metrics to it. It really is kind of supercharged here. But nonetheless, there it is. So let me know what your thoughts are. This is pretty fascinating, I think, and it gives you a perspective. And what is the lesson overall about this? And that is that even though silver is there's a lot of it been mined since 1900, and there's a considerable amount of it out there, there's no question that there's a lot less silver out there than the dollars printed. So that should give you some encouragement. Sooner or later, the price is going to catch up with some of the metrics that you see here. I mean, I'm not saying that silver is going to be $1,000 an ounce or anywhere near it, but sooner or later, something's got to give at some point in time, and I think that'll probably happen once the Federal Reserve begins to kind of move in the opposite direction, and we start to see them lower rates, and we start to see new rounds of quantitative easing coming back out again, because somehow some of these legislative mandates have got to be paid for, and that's going to require, probably printing more money, because they can only tax so much. There's not enough taxes, I don't think, to meet all the spending that they want to do. So that's a hidden tax, and that hidden tax is getting us with inflation. And sooner or later, silver will start to reveal itself as being a protector of and a preserver of wealth during those times. Even though it may not seem like it as I record this video, because as I record this video, the price of silver has actually taken a pretty big fall. But nonetheless, that's the long-term outlook. And these numbers, they really tell us a lot, especially when we're looking at it over the course of 5 years and 10 years. And so there you have it. In the end here, we know that silver and gold are preservers of wealth, and we will continue to hold on to these metals. So I hope you found this video informative, insightful, and educational. And I think it's an important topic. And I want to extend a multitude of gratitude to each and every one of you for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.